Let's be honest, we've all been there. You catch a nice trend and then you close early, feeling really smart. But then the market just keeps going without you. Yeah, of course, that hurts because sometimes, let's say you enter at this point, you sell at this point. This is actually a sniper entry, and then the market goes, and then you close at this point. You might take this whole profit, right? But then the market continues going down, and then you just see it going all the way down to this point. Of course, yes, that hurts. But then today, I'm going to fix all that. I will show you how to spot when a trend actually wants to continue, so that next time you ride it all the way instead of watching it fly away. So make sure that you stay tuned to this video and watch it to the end so that you don't miss on the quality of information that I'm going to provide in this video. And if you like this video, please don't forget to leave a thumbs up and subscribe to this channel so that you don't miss on any other important update that I'm going to post in the following days. So without wasting much of your time, let's jump right into it. So in this video, I'm going to categorize this video into 5 major areas that are important. So the first one will be to define what a trend continuation is, right? We need to define what a trend continuation is, and then another thing that we need to look at is the psychology that is behind the continuation. So I'm going to write the psychology behind, right? We need to look at the psychology behind whatever that will be happening, so that the market continues to go in whatever line that it will be going. And then another thing that we need to look at is how to identify a trend continuation, right? It is also important, right? It's also another thing that you need to look at. And then the fourth one is the common mistakes that usually most traders face when they are trading a trend continuation, right? And then the last thing that we need to do is when exactly to enter a trend continuation, right? So make sure that you watch the video to the end so that you won't miss on any of these things, because they are all equally important, right? So make sure that you watch the video to the end so that I'll explain. So the first thing that we are going to look at is to define a trend, right? So we are going to define a trend. Right? So what is it that we call a trend actually? So what you need to know about a trend is basically, if the market is going up, this is known as a trend, right? So for example, if we look at the chart right now, the gold USD that we are currently in, it's actually in a downtrend, right? We can say it's in a downtrend. From this point, the market was going all the way down, right, up to this point. So basically we can say that this market is in a downtrend, right? But what is it that we call a trend continuation? Because there are two different things, a trend and a trend continuation. So a trend continuation is when the market takes a breather, not a reversal, right, before continuing in that same direction, right? So we are saying a trend, let's say a trend is going in this direction, right? And then the market reverses. So if it reverses, it means that it has formed a completely new trend that is actually going down, right? So this one is an uptrend, and then this one is a downtrend. So this is not a trend continuation, this is actually a trend reversal. But then what we need to know is a trend continuation, right? So a trend continuation is said by the definition, it is when the market takes a breather, not a reversal. So we are saying the market goes up like this, right, and then it breathes at this point, and then it continues going up, right? So this one is known as the breather. This is just a breather. When the market finishes doing this breather, it will continue going up, right? So just think of it as a runner slowing down just to catch a breath, not entirely quitting the race. So that's just the definition of the trend continuation. We now move on to the next thing that is important, the psychology that is behind a continuation. So a continuation, we are saying, let's say for example, we said in this chart, the market is in a downtrend, right? Let's just connect the dots right here, right? So as you can see, the market is in a downtrend, right? So the psychology behind this thing is that it happens because the smart money never enters all at once. So we are saying when sellers are at this point, let's put a shadow zone. When sellers are at this point, right, they can never go all in at this point. They can never go all in at that point. At this, they can never go all in at this point, right? So because they are clever, right? They cannot go all in at this point, because if the market just reverses to the upside, they will lose all their funds. So they scale in and then they build positions, and then they use pullbacks to trap impatient traders, right? So we are saying these pullbacks at this point, these pullbacks, they are there to trap those impatient traders. If someone sees the market going up like this, they will start to think that the market is now reversing, or the market is now starting an uptrend, right? They will say the market is now starting an uptrend, which means they will say, if they were selling at this point, they will say, let's just exit at this point, right? So if they exited at this point, it means that they haven't collected much profit from this point to this point, right? And then the market will continue going down. So it basically means that it is there to trap all those impatient traders, and also those who might think the market is now starting to buy at this point, just to trap them before it continues moving in its actual direction, which is a downtrend. So we need to identify these areas, because they are breathers. They are actually, sometimes they can act as profit taking phases, right? And then they manipulate retail traders to think that it is actually a reversal, and then real smart money traders will actually add more to the consolidation, so that they can collect a lot of profit when the market continues to go in a downtrend, right? So basically that's the graphical representation of this thing. Anyway, so what you need to do to identify a trade continuation, right, is you need to use higher time frames first, because a 5-minute time frame doesn't really show enough information. Like, it means nothing if the 4-hour time frame is trending strong. So we are saying this market, let's say for example the market, we are in the 30-minute time frame, right? If we move to a higher time frame like the H4 time frame, we can clearly see that the market is in a downtrend, right? The market was in a downtrend before it was broken at this point, and then the market continued going up, right? It was a trend reversal, but then the market was in a downtrend ever since. If we are actually to zoom in and look in the 5-minute time frame, we can actually identify areas of bullish power, right? But then those things are just temporary, because they are to be surpassed by a higher time frame, because the higher time frame is stronger than a lower time frame trade. So what you need to do is you need to use the higher time frames, right, to identify a trend continuation pattern. And also you need to spot the continuation structures, right? What are the continuation structures? So the continuation structures, flags, right? We have flags, we have pennants, we have ascending triangles and descending triangles, right? So these are very important because they actually signal a trend continuation and a trend reversal, right? If there is actually a reversal, those are actually things that can help you to identify a trend continuation, right? So I will actually do an entire video on flags and pennants because it's actually a very long topic that I would think is actually worth creating a video of, because it is very important. It is pure price action that you need to understand. So I will do a video on flags and pennants, right? And pennants, yes, identify these as the same, but they're a little bit different. And we also have ascending and descending, right? We need to identify these. And also another thing that you need to identify a trend continuation is a pullback to a moving average zone or zones, right? So we are saying if you use indicators, let's say for example the market is headed towards a 20 moving average, an exponential moving average, the market, you know that the market is going to bounce at that point, right? So if it was actually in the opposite direction of the preceding trend, it means that it is just going to collect liquidity and then it continues going in the downtrend, right? So that's how you identify a trend continuation. And also what you need to do is to confirm with the volume or the momentum, right? So what you need to do right here, let's say you are at this point, right? The market was doing a reversal like this. This is just a breather, right? It's not a reversal. So you need to confirm the volume of this thing. If the volume is not that high, it means that this bullish power is not very powerful because it has low volume and it is going to be pushed to the downside, and then the market will continue in the downtrend. That is something that you need to identify before you enter or before you think that the market has now entered in a reversal pattern. Anyway, let's move on to the fourth one, which is the common mistakes that a lot of traders do, right? So we are saying, I'm just going to write them down so that you can see. So the first error that a lot of traders make is they enter before confirmation. So a lot of traders enter before confirmation, right? So you must never enter before confirmation of a trend continuation, right? You must never enter before a confirmation, right? So another thing that you need is you must never ignore trend exhaustion signals. So at this point, let's say the market was going down like this, right? And then this was a point of exhaustion, right? The market was starting to go to the upside to grab liquidity at this resistance line and then push down again. So you must never ignore this, because this one can actually stop you out, or there are areas where you actually need to identify so that you can make your decision with very quality information. So you must never ignore exhaustion, right? You must never ignore exhaustion. And then another thing that you need to consider, another mistake that you need to avoid in this thing is trading continuation against higher time frame direction, right? We are saying this one, I'm going to give you an illustration, right? We are saying at this point, as you can see, in this 4-hour time frame, the market is in a downtrend, right? Is in a downtrend. And then you go to the 5-minute time frame, and then you identify a pattern like this, and then you identify a pattern like this, and then you say, now this is a double bottom. So Forex Comrade told me that if you see a double bottom, you buy. Yes, you buy, and then you enter your position like this. Forex Comrade said you buy at this point, and then you enter your positions. You enter your positions at this point, and then you enter like this. Yes, this might be correct. This might actually be correct. Of course, it was the market didn't push high. It was actually it came actually to test this order block before it continued going up, right? But then you actually buy at this point, and then you stay in the market saying, you know what, Forex Comrade told me that you should buy at every double bottom. Yes, that might be correct, but then this is a 5-minute time frame, right? If we zoom out to the 4-hour time frame, we can clearly see that the market is in a downtrend. So this might be a very bad idea, or this might actually be a little bit recommended if you are a scalper. So you need to be a scalper for you to enter these high risk trades, because you know that you're not going to stay in the market for a very long time. So that's what you need in order for you to trade the trend continuation, right? This is the art of trend continuation. So if you have any question, just put it in the comment section below. I'll be more than happy to answer it, or make a video entirely on that question. And also, don't forget to subscribe, hit the notification bell so you don't miss on any important update that I'm going to post. I'm going to post longer videos on my YouTube channel, so make sure that you are subscribed there. If you are from TikTok, just go on YouTube and search Forex Comrade. You see my channel on the first of the list, and then subscribe to that channel. And don't forget to join my Telegram channel, where I'll put signals, daily signals that might be profitable for you for absolutely free. See you in the next video.